Europe debt crisis rises. All eyes will be on the ECB as the markets wait for Thursday's statements. Traders return from the holiday to assess the recent market composure. I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. So happy Tuesday, everybody, and welcome back from the long holiday weekend. Markets seemed to take Jackson Hole in stride last week, but this week we have ECB on Thursday ahead of us, jobs on Friday. Scott, how do you think traders will be positioning their first trading week of September?
I think a lot of people coming in relatively flat. Like you said, in August it was a strong month, and I think on Friday when Jackson Hole came out, the bears tried to break the market down. They tried to break the upper support. They tried to not let 1395, 1398 hold in there. But what happened was a lot of the same. We held support. We're continuing to go sideways. This morning futures are flat. I feel like we always have a big event, or there's always some crazy important date. It's been happening this entire year. So I think Thursday and Friday are important, but we have to really respect the market action, which has been actually very healthy / constructive.
And as you said, August was a good month. Holding multiple positions worked for a lot of traders out there. How do you think September could be any different?
I think we need to let the market figure it out. In the first quarter, we came in and it was a very nice move. Remember that wedge pattern that we talked about in December? We broke above it, and for a quarter, even intermediate guys like myself were able to hold stocks, maybe 8, sometimes 12, for that 3-month time period, which created a very profitable time holding positions with a hedge. And then if you remember, second quarter got a little toppy, had your head and shoulders top, and then pleasantly surprising, in August we saw some nice action in the leaders, and we went back to a little bit of a portfolio approach where maybe not as many as the first quarter because it was the summer and volume was a little lighter, but held 5 to 8 positions. Sperling held a lot more than that. So now as we enter September, when everyone's coming back from vacation, we still have some big events in front of us. We're at a little bit of an inflection point. I think traders are going to have like 1 foot in the door, 1 foot out, and we're going to wait to see what type of composure we have that gets created this week.
So what are the key levels to know in the S&P right now?
If we look at the chart of the S&P, we'll see, on the SPX that, there are 2 patterns that are controlling this market right now, actually a few of them. All right, first things first, here's the June 4th low. Since then, we've held this ascending channel / uptrend, for multi-months. Okay, and then, like you said, in August, it became very apparent that, we had a slow grind up with stocks acting very well until this outside day. Now this is very important. I want to focus right here a little bit on this outside day where the old high here of 1422, we pushed through it and failed. This was a day that a lot of traders cleaned up positions, including me. I think that was a day I went from a multi-position approach back to a few less, maybe longs and shorts. We had about a 24 to 28 handle move off those highs. But now, short term, we've been holding the 8-day moving average and the 21 days actually coming up a little bit. If you look here, you have 1397 held here, 1398. You go across here is 1395. So really, I would say watch 1395 to 1398. If this level were to break, either before or after Thursday, perhaps we get a little bit more corrective activity, which takes us to this trend, this more important trend that has been supported by institutions coming into the 50-day around 1375. So I would say here's your support levels. Here's support 1, support 2. Here is a micro resistance. You see how this has been controlling the short-term, say 7 or 8 sessions. We start trading above, just say 1413 to 1416. I would think some shorts will start getting scared and covering. Some guys might actually get into some multiple positions, and then this is your obstacle, which is 1422 to 1426. And then if you take a step further back, if you really look at like the composure of the market where everyone's complaining, here's the October 4th low. Since this low about 11 months ago, look at the move that we've had all the way up to these highs. So yes, can we correct a little bit? Maybe, but at this particular point, equities are working. You just don't want to chase excitement.
Well, let's check the temperature of some of the leading sectors right now. Home builders, one of the strongest sectors this year. Would you get involved here?
At this point, it's hard to get involved at highs. You want to play a breakout. You want to get involved with a tight pattern. But what you want to note, though, is that there is leadership. and that if you get involved early and you look at it and you measure it and you stay with it, there's a lot to like. And the beginning of the year, we had a segment, here with Kramer, with his Off the Charts, talking about the housing recovery and how that it could really help the stock market, help the economy. We've had positive data all year. That's what the bulls have been hanging their hat on. If you take a look at the XHB, you will see that, look at this move that it had. This was, I think, your last breakout, or you had a Bible breakout right here. This was your momentum buy, and now we're still, look at this, we're above the 8-day moving average. We're also above the 21-day, and there is leadership. There are stocks showing alpha in this group. So when I want to see if the market's faltering, I look to the home builders, and if they're still acting well, it gives me some confidence that we can continue higher.
Retail has also had a nice run, trading right now above all key moving averages. Where should investors look to potentially get involved here?
I think retail also. A lot of investors have gotten rewarded with Walmart this year, Target this year, Costco, even some trades in Macy's, some others. And this group as a whole, again, you want to see leadership continue. And right now it's continuing. You look at the RTHs, a group we've talked about so many times here. This was, this last trend that was holding. And then, you had a breakout right here. Okay, that got retested coming along, and ever since, look at this, following the 8-day, near highs, so it's at the highs before the SPX, showing leadership. You have another trend here. So what I would say is, if you're looking at short-term composure, watch the 8 and 21-day moving averages. Same way we watched it, when we broke out in 2012. Remember when we broke out right here, and then it stayed with the 8-day, with the 21-day. Then finally, when it broke below, it gave you a little bit of a red flag, but again, it didn't correct that much. So here we are again, following the 8 and 21-day. I would stay with it as long as it follows that trend.
And the Qs finished the day up on Friday, has been basing at higher levels. So what's your strategy here?
I think that technology, as a leader is healthy. People complain when the Dow's leading, and which I agree. I'd rather see the Qs lead. Some people even think the Russell should lead. I think you're asking a lot for the Russell to lead, because that means they're going for the craziest growth stocks out there. Technology is a good mix. You have growth, but you also have established, very liquid companies. We saw a lot of great action in a lot of the high beta names in August. If you look here at the Qs, this is what I'm seeing. At this point, it's not holding the 8-day, it's trying to hold the 21-day. It's had a really nice move. This was the last pivot that we talked about buying. Here is your flag. Now, just like everything else, it's somewhat choppy. It's developing an upper floor. You have a defined resistance here. So at this point, if you're in it short term, I would say be in tier 1. And then if these Qs start getting above, just say 68, 67, it could help ignite another rally. So keep your eyes on the Qs, because if it starts breaking this area, maybe that gives us some clues that 1395, 1398 would break on the S&P. But if it starts to lead and head higher, I do think that the S&P will follow.
And consumer discretionary, XLY, currently not too far away from the recent 52-week high. So what are the key levels to know here?
This one too, it's like, as we roll through all these sectors, you try and make excuses not to like the stock market. I think the only ones with excuses are the ones not in, are the ones that are actually probably just short and rolling it up, and the ones that, think that they can't make money there. But we just rolled through like 4 different sectors, and here's another one that's heading higher. You look here at XLY, you look at this group probably has the best known names out there, and it too had a nice breakout here in late July, August, been methodically moving higher, following the 8-day moving average, away from the 21, away from the 50. So right now it is heading towards the old highs, which could bring out some sellers. Create a double top, but at this particular point, what usually happens is the best stocks out there follow their 8-day, follow their 21-day. So when you get indices following their 8 and 21-day, it shows you commitment. It could spoil you a little bit, because all of a sudden if you get a little correction to the 50-day, which typically holds during a nice move, people get worried about it. But at this particular point, watch the 8 and 21. If we roll below there, close below there, and can't get back above, then perhaps we get that correction type activity. But until that happens, don't fight the tape and stay with it, because stocks are on the move.
And lastly, financials, not the best performing sector out there right now, but is acting better as of late. So how does the chart of the XLF look to you?
It looks like at least it's not a headwind. When we've been in the corrective phases, financials have been in the news, everyone's obsessing over them. And, at this particular point, they might not be breaking out and leading the market, but you could be in some, and some are just trending higher. You look at the chart of the XLF, it's not a blockbuster or a barn burner, but ever since the low, just slowly, methodically moving up. But at this point, the moving averages are catching up. You had a small outside day here, but all in all, taking it in stride. And I think some stocks in that group are buyable on the dip. Sometimes you get a pattern to trade. I don't see many right now, but I'll have some of that on the price point sheet a little bit later.
And gold and silver ignited in August. Gold had a nice move on Friday, returned to the upside with high volume. How do you play it now after its recent impressive move?
Well, it was interesting because, ever since we put the top in, people have been looking for this breakout, looking for this tight pattern, looking, just to get involved. And I know I tried it multiple times, and I lost money a lot, as it always failed, as the intermediate trend held it. And then finally, around August 20th, silver led the way, but we'll talk about gold right here, and it finally ignited. And it showed commitment, and it rewarded guys for holding. And then, I would say after a week and a nice 4-day move, it needed to rest. So the question was, what's your time frame on gold and silver? Did you sell some into the 4-day move? Because I sold most of it into the 4-day move at first and then got flat because I was going away. But I said if you get out of it and try and be too cute, you might miss a bigger move, a more macro move. So the difference between short-term and macro. If you look at the chart here of GLD, you will see, here is that top way back when this top was put in GLD in September, almost a year ago. Wow. And then ever since then it's been controlled. And the most recent potent down bar is right here, controlling the trade. And then if you take a close look right here, finally you see everything coming together. You see the downtrend coming in. You see this tight pattern right here. You saw a nice, green bar right when silver broke out that day. And then, we took some, it held up. This was your igniting, came in, nice little corrective activity, held the 8 and 21 day, didn't even come close to retesting the 158, igniting area, and then went on Friday. And now at this point, I would say short term, you have some room to about 166, 167. So watch, after Friday's move, I would say, you want to see it digest, hold half of it. So I would say as long as, the GLDs hold above, just say 162.45, which was the level we talked about, buying it after it ignites. So as long as it stays above this, you're going to see short-term momentum pent up. Then we go through Friday's high. Next level is 167. And then if you really take a longer-term look at it, just getting going here. So here's resistance, and then you have the twin peaks that come in above 170. So you can time these things if you want to, if you're around, and right now you just have to figure out what time frame you want to be in them.
And silver has been acting even better than gold. You traded silver and booked some profit. Do you look to get involved again?
I'm going to look to get involved. I unfortunately wasn't here on Friday, and that's when you had the buyable pullback and then it ignited, which is fine. If I'm not going to have it, I can't be upset that I don't own it. But for the community, we talked about levels to buy it. Whether to stay with it, that you still have some room. But most importantly, the right time when it ignited, that was your entry. You always have to figure out what your exits are. Sometimes you take profits too early, but if you do, you don't get poor that way. But a lot of guys were saying, listen, don't get too cute here with silver. We could have a 50% plus move from the day it ignited, and we wrote about that in the blog as well. So you look here in silver, and you'll see that here was that day that it went. Okay, you had a nice tight pattern here. Look at that, couldn't get through. Finally, through 27.45, 27.55. What did it do? It closed in the highs. So the good book tells you take some home. So you had a nice gap up. Then the next day here, it was still an add when it went above this high of 28.65. Because remember, we talked about this recent area, so you knew if it did get and stay above this, it could continue. This was more intermediate resistance. And then I think this is when I wrote a note saying it needs a little bit of time. And you know what? 5 days of time intact. This actually held the gap where gold filled it, so showing you even more power than gold, which it actually went on this day before gold. So silver's been giving you more power versus gold for now. Here was your last, flag pattern, Fed day, boom. And now if you want to look at where the next level of real resistance is, you go across and you will see 32-ish is probably a decent objective. And then if you want to even look longer term to see, where it can continue. And if you look where, the peak, remember that when it went parabolic, look where we are now. So if you want to draw a line to, more of a, we're going to have another area coming in real soon. Or actually, look, no, that broke right there, boom. So 32 next resistance, still on the move. Stay with this trade. I think it's going to be very active in September.
Okay, well, let's do some quick hits here. Apple back in motion on Friday, bouncing off support. Do you expect to see some follow through heading into today's session?
Well, Apple is, in the last month, that was something very, not even surprising. It just, ever since the earnings, gave you great opportunities, and that helped my month. I focused on Apple a lot. There was a lot of activity there. Gave us a plentiful, for whatever time frame you are. If you're an investor, you're happy. If you're an intermediate trader, you're happy. If you're a casual active trader, it gave you opportunities. So if you look at the chart here of Apple, you will see that, here was when it missed earnings. Oh, first of all, look at this beautiful run, and then it held higher. Anyway, let's get a little closer up. This was the earnings. This is when they missed, but within 3 days, went in that gap and negated it, showed you power. So right there, it showed you that meant nothing. They gave it a pass. So this is when we started getting back involved for a nice swing trade. And then you had entry here. Then you had the entry when it broke above, 644. And then, finally peaked out here, gave you that outside day, but it was buyable. And then, coming in here, it looked really good. And then you had the Samsung news, right? But it became a sell. So just like anything out there, look where we came from, look where we were. It wasn't a buyable news release, it was a sellable one because, it wasn't a blaring outside day, but look what it did. It didn't close well, and then within a few days, it filled the gap. So it showed you that this gap wasn't strong enough to hold. Okay, same way this one, the downside wasn't strong enough to keep it going down. This upside wasn't strong enough, so you didn't have to be in such a rush. So finally, you want to look where we are right now. Friday showed a little weakness early on, traded through 662.85, put a low in right now of 657. So some guys got involved there, actually even versus support. I was not here for it, so I'm actually flat Apple. So, I'm going to be in the same boat as everyone else. I need to get back into a swing. I need to get back into cash flow. So for right now, the high from Friday is 668. So I want to see, this wedge type pattern develop because that's what it's doing. It's developing another upper area here, digesting the last breakout move. So at this point, I would say if it looks relatively strong today and can get above 668, I'll trade it. If it can't, I'll leave it alone, let it get ready, and then see how we act as we get a little bit closer to the big product release. Because so don't forget here that I think the date is the 12th or the 13th where they show you the iPhone 5, they're going to show you the iPad, and sometimes they try and sell that event. So we'll see where we are as we get to that event.
All right. Got to have at least one long hit and quick hits, right?
Yes. A little long. Apple's always a long story.
It's fine. So let's talk Google, which has been relatively strong, trading around the 52-week high. Where's the next breakout level with Google?
I don't know if this will be a quick hit either, because this one gave us so much opportunity too. When that Samsung news came out, they started to hit Google, and we talked here saying I think 660 will be buyable, that it's not going to go after them on a software basis. They're not going to all of a sudden be big monopoly, antitrust, blah, blah, blah. P.S. You look at the chart here of Google ever since earnings. Since earnings, it's up almost 90 points or so. So look at that big move. And then you had the gap down right here. We drew this support, it held. Then you had another pivot when it went into this 672 that was buyable. And then right before leaving, it gave me a nice little vacation present. I was able to buy it through the high of 680, another 7 points. So now here it is holding above it, flagging. If you look on a more macro basis, you'll see that it is holding above the recent highs here. It's above all the moving averages. It's been a huge move, so you have to be a little careful. You can't be all in, but all in all, I think you turn to the monthly chart, and that tells you the investment story, where at some point in the next 3 to 9 months, this 747 gets tested and taken out, and you will see headlines saying Google at historic highs.
Now, what's your strategy with Visa, where the downtrend has remained in control?
Well, Visa, a little bit of a different story. That one's given us good trades. The investors have been very well, rewarded there too with MasterCard and some of the others. Recently a lot of my traders haven't talked about it because, some sectors go in favor, some are tradable at times, and some leave. At this particular point, you look at Visa, and you will see that, ever since making the last high here, it really there hasn't been a clean trade. But if you look at what happened on Friday, you do see a nice reversal. This is at the 50-day, and it just started to nudge above this downtrend here. Broke above this, the 3-4 day area. So I think that if you want to be long Visa short term, for a multiple position approach, just be long versus 126. As an investor, even though it's been out of play, no reason to sell it, not even near the 200 day, trending higher. Look at this stock. This has been an unbelievable situation where if you got invested, shows you can be an equity investor. Look at this chart here. Oh my goodness. Okay, you actually look at it like that, and you could even see where it cupped and where your breakout pivot was. So here you go, right above this 90. That's when it started this march to 128-ish.
Okay, and Home Depot looks like it could be ready for a move higher. So where might you get involved?
Home Depot, another one that 2 years ago was the retail stock of the year. It's holding higher. It had good earnings. Just like Walmart and Target and Costco. Granted, there are sometimes to trade it, sometimes just to hold it. You look at this stock here, though, and Home Depot has shown you some impressive strength. This was the gap up after earnings. This is when you probably, or this is when it would have been a better entry just because of, entries and exits, which are key for me. That was when it went above here. But now look at it. It's flagging again, consolidating a move, which has been a pretty sizable one. It'll be interesting, and this is worth noting, that if Home Depot starts to break above this upper range and starts getting above 57 and continues, that'll give us some clues that the market will break higher. If for some reason it starts to break this upper flag, which we've seen to the downside, then we know that even the strongest stocks right now, will be pressured if we don't hold 1395 to 1398.
And Toll Brothers also looking good, trading above all key moving averages. What price points would you be looking at?
This too is giving you multiple entries, and we know that the XHB, the home builders, have been the strongest ones. So you want to look for strong stocks within them to create some alpha. And you look here, you'll see that, here you go. Every time it gets tight, you want to watch it for potential move. Here was a nice little breakout right here from this lower wedge back in June. Then it consolidated what was a really nice move here. Then this was your day to, breaking out above 31. And now it's, it's holding higher. It tried to get above on Friday. Not much power because, again, I think traders still aren't sure exactly what's going to happen here in the next week or so with the ECB, with the jobs number, blah, blah, blah. But PS, it's been a really good year for Toll Brothers. It's been a really good year for a lot of the other home builders. Look where it's been since October. This was, I think, right around that October. Wow, look at that. Pow. So at this point, a lot to like here. Stay with the trend, just don't chase it, and I wouldn't be in anything more than a tier 1.
Well, and as you mentioned, we do have ECB on Thursday, jobs on Friday. How will you be positioning yourself heading into these major headlines?
Well, I think today's Tuesday, so I want to see what happens today. People are going to the bears are probably going to come and try and sell them, and say, oh, there was no volume all summer long. That's the reason why the bulls were playing in their playpen. I don't buy that. So we'll see if today we hold above 1395, 1398, and I see some of the leaders starting to act well. I'll put on some more. I'll get like some positions on once again, like I did in August or like I did in the first quarter. But if I see that some of the leaders aren't ready and the sellers can take some control, who knows? If we break below 1398 and close below, I'll get short. Yes, I do make money short, and we do play both ways, but I tend to like having multiple positions because it's much easier to make money for the way I trade with the hedge. So at this point, let's see what happens the next 2 days. There's probably going to be headlines, and there's going to be news releases, and there's going to be some rumors. Yeah, there might be some stuff from overseas that push the market around. So let's see who pushes the market around, who's got more strength, how the leaders act. We showed you the leading sectors to give us clues on whether or not we continue higher. If they show some faulty signs, well, no, maybe you have to be a little bit more cautionary that, who knows, maybe we test 1375, the 50-day, which is that uptrend that's been intact since June 4th. So there's a lot of question marks. So when there's like a lot of question marks, you know what I do?
What do you do?
I go in neutral. And then I just put it in a gear depending on what the action's showing me. So I'm probably going to look for some singles, some quick hits that I usually make long hits, and just play it by ear. No need to be a hero right off the bat. Let the market come to you. Keep your expectations low, and maybe you'll be pleasantly surprised.
And with that said, happy trading, everyone. Have a great day.